Good morning. It's Friday, May 16th. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So, what a day in the metals here yesterday. Many of the clients they added on the washout, they let some of those contracts go later in the session. So, we saw gold prices surge really through the afternoon hours here, supported by quite a bit of bargain hunting here, some short covering in the futures markets. And it was a surprise drop here in U.S. producer price indexes for April, which declined about 0.4% with the expected 0.3% increase. It's that data coming in much lower than expected that casted out some dovish views on U.S. monetary policy, potentially opening up the door for future interest rate cuts. So we look at that next Fed meeting. It's going to be 33 days away, only about an 8.3% chance that the Fed cuts rates. You go out to the July meeting, it's closer to 36%. You got to September, and it's closer to about 80% chance that the Fed will cut rates, and even a 22% chance that they will cut 50 basis points. So we're going to want to continue to monitor that and the impact on the dollar index, two-year Treasury yields in other markets. So looking at the S&P 500 and NASDAQ here, still inching up here, 59.51 on the S&P 500. So getting closer to that top end where there is some resistance here. So we'll see if some of the traders book profits on the S&P coming into later into today's session here. So stock futures are heading for their fifth straight session in the green, with the S&P 500 on track for one of its best weeks here this year. The dollar index and 10-year Treasury yields, they are edging a bit lower here, and traders are pricing in more interest rate cuts. So you look at the 2-year Treasury yield slipping back below 4% here, the 10-year Treasury yield down at 4.41%, and then the dollar index hovering right around just either side of the 100 mark here. Really, we need to see the dollar index continue to break down here, as well as Treasury yields, in order to give any kind of meaningful impact to the upside on the gold market. Now, looking at the some of the economic data and things that are coming out here today, you are going to have U.S. housing starts, import prices, University of Michigan consumer sentiment, and inflation expectations, along with a couple Fed speakers. Looking at the gold futures here, they are slipping down about 1.15% overnight, hitting a high of 32.55.80, running into some resistance up there, and now slipping below the 3,200 mark. So the market is really starting to break down quite a bit here in the early hour session. We're even seeing the volatility index come off as well. So gold is really extending its weekly losses here. A lot of traders are booking profits. A lot of traders are lightening up on any kind of rally that we get in the market here. So, and it's really comes as the market has been rattled as far as some of the strong fundamentals in the gold market, with the easing tensions between US and China, cutting some of the demand for the safe haven flows here, and we're seeing some reduced ETF flows. So what's a watch here is obviously going to be the ETF flows, the central bank buying speculative Chinese demand. So the technicals, you start to look at the market coming down. Remember, we had this channel that we were in for a number of years, and the market finally broke out to the upside, got overbought, extended its gains up to 35.09, came down and basically retested the top of that channel here and had a nice bounce yesterday. So we're going to want to continue to monitor that channel and where the market lies on either side of it, because we don't want to see a substantial breakdown in that gold market because of the fact that it might validate a head and shoulders formation here. So we want to continue to monitor and see how that right shoulder is building on the gold market, and see if we're going to bounce up to about 3,400 before starting its decline. Now, gold futures are under some pressure again, extending the losses down about $45 now on the session. That's down 1.4%. Silver futures down about 40 cents. It's 1.2%. Copper futures, they've been lower for most of the overnight session here, and the gold silver ratio sits at 98-1. So there is a cautious sentiment on Asia, and we want to monitor global economic growth and demand expectations, because that's where silver and copper are going to see their benefit and their disconnect from the gold market. Now, exchange traded funds, they did cut about 265,000 troy ounces from their holdings here yesterday. And again, I'm seeing more of a rotation here with U.S. equities so strong at the moment. So ETFs also cut about 560,000 ounces of silver from the holdings in the previous session as well. So you take your year-to-date percentage change, you got gold, it's a 6.8% increase, and it's really a decrease from yesterday, and a pretty sizable one. The same thing with the silver market. We're at 2.6%. That's inching down a bit. The key level on that gold-silver ratio is about 97-1, where that was the April 23rd low, and we want to see that market break below there. Now, we do have crude oil futures quite volatile here last couple sessions here, posting back-to-back losses after President Trump. He expressed some optimism about reaching a nuclear deal with Iran, and you have the EIA or the IEA forecasting a looser supply and demand balance sheet here, and there is a slight uptick in that demand growth. So gold extending another little bit lower here, so down about $53 trading at $31.74 last. So we want to really keep an eye on some of these critical levels here. I haven't been very bullish on the gold market here recently since its breakout to the upside and it's come back down here. It's some of the fundamentals are kind of fading off a bit here. So we're going to see quite a bit of volatility, especially we'll have some dip buyers probably come in at some point during this session here. We'll look for a possible retest of that 3,200. So critical level of support on the gold market really is going to be some of these lows here that we saw yesterday, that 31.50 down to 23. That's your pocket support. I expect to see some dip buyers coming around that level. And again, I've been expressing on this channel that I think we're starting a kind of a new range on here up to about 33.50 if we get some of those fundamentals coming back into the market. Now, looking at the outside markets, we did have bean oil yesterday really selling off here, was limit down. It impacted the soybean market and also the sugar market. Bean oil futures are down about 2% as of this recording, and then soybean futures up about 2 cents. We saw cattle futures down pretty extensively as well. That's a market that a lot of people have taken on put options and short futures as well, so want to continue to monitor that throughout the session. Another market on my radar has been sugar, where you have one of the largest sugar traders. They slashed their forecast for the global sugar surplus for the 2025-2026 season, citing weather and transportation risks in Brazil. So we'll want to keep an eye on that market as well. So if you guys got any questions, shoot an email at info@bluelinefutures.com. And then remember that futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.